Hey guys, what's up? It's Pitmeister here. I know it's been a long time since I made a video, but life's been a little busy. But something I wanted to talk about was, everybody's always looking for the holy grail in trading. There really isn't one, of course. There is no system that works every time, but there is a pattern that I use in my daily strategy that I think a lot of people can use, even beginners, and it's so easy to spot, and it works. It works more oftentimes than it doesn't. So I just wanted to go over it with you real quick because I saw it a lot today. I mean, today was just a crazy, crazy day in the market. Um, the euro. This is the euro USD 5-minute chart. Now, um, one thing to be clear of, again, this is a 5-minute chart. I am a scalper. That's what I do. I enjoy it, and so this strategy may not be for you, but this pattern works on all time frames. The only reason I see it more often is because I'm watching 5-minute charts as opposed to daily charts. But this pattern works on all time frames, and it's called the bull bear flag pattern. Bull flags, bear flags. They're what's known as continuation patterns. Basically, the way it works is, and here's a perfect example of it right here, and I'm going to show you. There's just a ton of them, a lot of them today. But basically, what happens is there's a sharp move down. Even this would be one. There's a sharp move down, usually anywhere from 3 to 4 candles. Now, of course, if this was a daily chart, this would represent 3 days, 1, 2, 3. So on a daily chart, that I would definitely pay more attention. On a 5-minute chart, I usually like to see at least 3. So here's 3. I mean, basically what it is, sharp move down, then you have a consolidation, and then you have a continuation. So, the trend here is down. Obviously, you can see we're going down, we're going down, we're going down, and then we have boom, we drop. And we have this slight continuation this continued consolidation. Look at for the low volume as well, and then boom, it snaps down on high volume. So what I want to do, and there's a couple tools you can use to kind of help confirm it. So and you'll have to forgive me. I hope you can see this. I'm using my remote desktop connector on my Mac because MetaTrader still has not created a platform for the Mac yet, and I wish they would. Anyway, so hopefully you can see this. So the first thing that I do, and I'm going to go ahead and see, because this is not the right time. I don't even know what time this is. I forget. But all I know is the market opens for me anywhere between 1100 and 12 my time, or I'm sorry, GMT, which is 12 o'clock is 5 o'clock in the morning for me. So that's when I try to get to my computer by 4:30, so I can at least between 4 and 4:30, so I can check out some stuff, set everything up. But so let's start it today, and let me show you exactly what I mean here. So when I would have come in, we'll start it right here at about 11:30. First thing I would do is, I mean, you can already see. Look, here's one right here. Here's a bear flag. Here's a bull flag here. Bull flag here. Bull flag here. This one I would have been cautious on, but I'll talk more about that. But this is one too. And look at that. I mean, here's another one. Boom, all the way up. You could have ridden this thing, 5 times before before it reversed on you. And who knows where it's going to go here. It looks like these are now little bear flags. See, 1, 2, 3, consolidation, up, 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 boom, down, up, boom, down. I mean, it almost works every time. Not all the time, but most of the time. So what I would have done is I would come in and I would already see, here's where I'd be coming in. And I'm going to change this. We have to go to, let's see here. First, let's go to, what I do is I get my little Fibonacci indicator here. Look for retracements, because that's what they do. Prices retrace before they continue down. So I would have been coming in right about here. I would have seen this and I would have said, okay, so we have a swing high, and we go to the, I need to change that. Oh man, but I'm not going to be able to because of this stupid remote desktop thing. Because I have two monitors downstairs, and when I try to open it, it doesn't. It'll open on the other screen. So that's going to be tough. I don't know how I'm gonna. I might have to change. Let me do this. Maybe this will work better if I change the color scheme here. Probably yellow would work. Oh yeah. Okay. Cool. Okay. So as you can see, so here's our swing high, here's our swing low. I would have immediately drawn these, and I would have started looking. And remember, these full candles, or maybe the, actually I don't really like yellow on black. It's just weird on my eyes. Maybe green will look better. Yeah, green. Okay, cool. So the white candles represent down candles. The ones that aren't shaded represent up candles. Okay. So what I would have done is I would have drawn this, and I'd be watching and say, okay, here's a big down move right here, sharp decline, followed by, boom, a consolidation. So we hit 50% retracement. As I'm doing this now, I would start looking for confirmation of a continuation. So usually the first down candle is the one that works, but usually you like the down candle to kind of be further down below the green candle. So I probably wouldn't have taken this one just because it couldn't close lower than this candle. So we'd be waiting, and we'd see another one. Now this is tricky. I might have taken this one. Now an aggressive, now let's say I took this right here. But this would be one of the instances where it didn't work the first time, but it would work the second time. So what I would have done is I would have entered right here as soon as this closed. Now an aggressive trader puts their stop right here, above here, where where there's a little bit of resistance. A conservative trader would actually put their stop all the way up here. But me, I'm aggressive. I would go here. I like to know if the trade's going to work out or not. If not, I'm out. So I would have gotten in here, stop up here. I would have got stopped out here. I would have said, okay. But still, we haven't made any lower lows. Right here, this is still the low. So what I would have done is waited, and then I would have seen, okay, now we've come up to the 78% retracement level, meaning that price has retraced this move 78%, because here's 100. That means all the gains were lost. So I'd have been like, okay, this might be a reversal. So we wait and see what happens. If we get if we get a move all the way up here, usually when it passes this line here and it gets like up to here, that's usually a good sign of a reversal, which means it's not going to be a flag and it's going to continue to go up, as you'll see here. Anyway, so I would wait and say, okay, I want to wait for it to break up. It's got to break the trend, which I didn't draw trend lines again, but because, and I'll show you here in a second. So I would have waited, it would have closed below, 1, 2, 3. Now I would be saying to myself, okay, now we just went back down to the 38.2%. So we wait, we get a close, and we get a lower close. Now I probably would have went in right here, but again, this time, support and resistance. So my stop would have been actually up here this time, because that's the high. So I would have went in, and obviously this one would have worked out. I wish I had my little pointer here. That's important to have. Let's see if I can get that. I want to show you a better one first so you can kind of see something. So, and again, that one would have worked out. Now, here we don't know, even though obviously we can see the trend is going up now, but we don't know that. We don't know that until our trend lines are broken. So let's see if I can get my little trend line tool here. Let's see. Should be here. There we go. Trend line. Okay. So here we go. Here, we'll just say the trend line starts here. And get it here. Alright. So we don't know that this is a new uptrend until this line breaks. So So again, here's another flag pattern. We'd see it, we'd draw on our trend line, and it would have actually not even hit there. So let's assume for a second, you know, when we first come, we put our trend line here. Okay, so we would have been waiting, we would have seen this sharp move, but we wouldn't have gotten any candles that would have told us to get back in. We would have been waiting, consolidation, boom, now we have a break in the trend line, and now we can say, okay, things are going to go, we think things might change. So we wait, and obviously, look, they don't. They go back down, there's your retracement, another bear candle, boom, so you could have got in this one. So then when you move the trend line, now it's here. Okay, now you wait again, and then, because if you wait for these perfect setups, they do happen, and they happen a lot. So boom, look, now we get another break of the trend line. And now another important thing right here is that when the trend line breaks, when you have a break of the trend line like this, you got to wait for a confirmation candle. So usually this candle will tell you, oh, there might be a new trend starting. And then we get this resistance, now we get a pullback. So this is a tricky one. And then we have another up candle, we broke back down, then we broke back up, then we broke back down, and then we broke back up. What that tells me is that price doesn't want to go down. It's trying, but it can't, so the bulls are taking over. So what happens is we wait, we get another break, and then boom, we get our 3 candle close. 1, 2, 3. Now the theory is behind these bull flags, and if I can make this a little bit bigger, maybe I can. I think I don't have the little, next time, the next video, because I'm going to have to do a follow-up, because obviously I'm running out of time here. So I'm going to go, so that's, let's see, maybe and I can't delete these either, I don't think. Hopefully I can. I don't like to delete them because I like to use them. But you know what, I'll make another video. No, screw it, we'll just keep going. Alright. But I think YouTube can only be 10 minutes long, so I will finish up this video on part 2.